BigBear.AI stock was up about 12% today, and we just wrapped up our live session in StockMate. We were trading Apple, the 2x of Apple. We've seen it in this consistent uptrend, and Apple stock is a really good long-term play. But we've seen them really find support here, and we ended up entering a trade on AAPX. We're up about 3% on the trade and about $218 profit today on just 185 shares, which basically we invested about 4,000 and we're up about $218 so far to start the day. So one of the trades that we were really keeping a close eye on today was BigBear. APLD was up, quantum computing was up, data centers were doing well, but really we were looking at BigBear as they surged back up to that $5.50 range and made a big chunk of this 15% increase we were looking for yesterday. They ended up making that 15% surge that we were projecting in our live session yesterday, and they were able to surge 15% to $5.50 before pulling back down to that $5 support. So as we look at BigBear and their trend, we do see them start to make this reversal, now validating this previous resistance level potentially as a support that is around $5 a share, which is what they need in order to break out and continue this uptrend that we're seeing them develop from this overall uptrend starting back in December. So there's three things we look at when analyzing a stock. The first is the market. The second is the analysis, which is broken down into three parts. And then the third is the plan. So the profit margins and risk. So for the market, we've seen the defense market really grow. We entered back in around $2 a share, or even before that, October is when we started covering it with a $2.80 average. It's surged to $10 in February. This was when defense contracts were big. We saw Palantir surging, greater market correction into March and April. This company is also partnered there with Palantir. You see them start to get some more momentum, continue to build their market cap. Before summer, they were up to about $8 again, and then pulled back recently to this $5 support. So now that we're looking at them in this range, couple things to note. In the market, defense contracts are plentiful right now. BAIG was just introduced, which is the 2x of BigBear.AI. So we're seeing more trading activity on BigBear. The volume has seen increases. Today they have 60 million in volume, which is pretty high. I mean, that's actually starting to get up there. It's you could see that's actually almost there with Tesla with some of their volume today, and we see them go up on that volume today. Then you have the market of the modeling, the AI models, the simulation, but primarily where they're seeing the most growth in the market is the true face, the object detection, the AI-based driven facial detection for accurate authentication in real time and transmits securely to the biometric matching application for convenient rapid identity verification. So essentially, they've seen the market of their airport security get some momentum. Part of it is because TSA has been looking for more contracts, looking for more companies that can provide, according to TSA in this .gov article, they're looking for more use of predictive analytics, more biometrics, more focus on AI-driven technology. And so with their CEO, Kevin McAleenan, who's the U.S. Customs and Border Protection Commissioner in the past, and also the acting secretary of the U.S. Department of Homeland Security, since he's the CEO of BigBear now, it would make sense they continue to drive their innovation in the airports. And that's kind of what we've seen. So the very scanned deployments of this technology, I was just flying recently and I saw it in two airports. We saw it in LAX and we saw it in Denver International Airport when we were flying out to a quantum computing conference. That was just last week. So I've seen the real world usage, and the flight attendants there, they're very nice. They're like, yeah, just use this. It'll scan your face and you can go in, or the TSA. But one thing that we've noticed is their rapid deployment. Now, just because they have deployments doesn't necessarily guarantee revenue. because they could just be building the infrastructure. We've seen them come out with articles recently, like the biometrics deployments into JFK, into Los Angeles, Port of Seattle, Charlotte, Chicago, Dallas. That's really cool. But also, where we've been focusing is the article yesterday when they accelerated US arrivals here at Nashville, a new deployment there at Nashville Airport Authority with the very scan tech. And this is with real-time insights to make it faster for Nashville to process passengers. And so they're going to Nashville there. They also get these contracts, but then we're saying, okay, what about the revenue? And that's the question, right? So when we look at the financials, so let's just take a step back. We got into three steps. The first step, we see more Department of Defense contracts. We see them in the right market. We see the real world usage, which is a big indicator. But then we see now the analysis, which is we've seen some of the news come out related to deployment of not just the Palantir partnership that they have there, but the very scan biometric data that they're getting from deploying at the airports. You have then the financials. So you get into the news, now we get into the financials. The financials haven't come in with expanded revenues necessarily. I mean, annually they've been averaging around 150 million and slightly increasing year over year, but ultimately we've seen the net income negative there. It dropped. The revenue was basically flatlined or a little bit down, and we hadn't seen the revenue kick in despite all of these deployments. Now, a lot of these deployments came in the last few months, and we know their focus is where the biggest events are happening. So where we see them start to gain their edge financially, but they still, again, struggle on the income side right now, is the balance sheet. They've seen more investors jump in to the stock buying. You got more ownership from BlackRock and more ownership from State Street. Just recently, we saw some change in shares and some positions get bought up after their recent earnings when they dipped. So we see more increased positions now from institutional holders. But you also are seeing the actual funding for the company. They did some offerings earlier this year where they raised some capital to get themselves up into that $600 million mark, eyeing that $1 billion in asset mark coming up here. So total assets now 66% up year over year, 440% up on their cash year over year. So while their income's stagnant, they have seen increases most likely in the potential build out of the very scan tech and of their deployments at the Panama Canal for monitoring some of the ports there with their computer management. It's like an AI vision that can see the different ships and what people are doing, where they're coming from, where they're going. It's pretty high tech, but that's where they've seen the innovation. So that brings us, we get to the financials. That brings us to the chart. What we've seen recently, I have long-term positions in Big Bear. We have no short-term trades happening right now as we were trading Apple today. As I mentioned earlier, that trade's going well. But we have traded them very consistently. We just kind of waited now for some of these moves to take place. And we actually did trade them and ended up selling earlier before they made this big swing when we were trading them earlier this week during their consolidation phase. So what we've seen recently, aside from the last year, they're really building this market cap. You see them get up here, right? You see them go from $1 a share to now $5 a share. But after the recent sell down from earnings, and we see them sell down through the summer and then finally find potentially a support here, this is what we saw. So what they were doing was they were consolidating and they were trending downward through August. By September, they started consolidating from left to right. Now that's the second stage to a reversal, which is the third stage it's followed by the third stage, which is going to be the reversal in the trend direction. So they go from a downtrend here to then a consolidation, which is the second stage, to then a reversal. We start to see them potentially break back up into that $5.50 range, which is what they touched this morning. And then after making that surge this morning, they pulled back down, potentially validating this $5 support and looking to continue the direction up into $5.50, $6 a share. So now they have a support at $5 a share. They're going to look to validate and continue to retest on their potential reversal. They do have a greater 2-month, 3-month trend here where it's kind of downtrending. And so they're going to face resistance here at around this $5.50 to $6 range. But if they can break out above about $5.75 and start to make the range break out above this kind of downtrend that's happening over the last few months, then we start to see them break out, continue the overall direction of the stock, which has been bullish, right? So we'd see something like this, see them get up into these ranges and maybe correct or continue to build market cap into that $7 to $10 range, something like this. So they're down to that 200-day moving average, which they normally bounce at, this 200-day moving average here. And they're holding below the EMA. They have been, that blue line. Oftentimes when we're looking at the bullish momentum, you'll see that blue line acts as a support. But when they're bearish, it's going to act as a resistance. And it's been acting as a resistance, but just recently we start to see them break above on the 1-day candle and start to maybe bounce this 200-day moving average and try to continue to break out into that $6 to $7 range. So nearest support level is $5. Nearest resistance level is going to be about $5.75, and we'll continue to monitor them throughout the day today, Friday, and look to potentially take advantage of any trades on Monday. So we were looking at robotics this morning. They were fast growing. We're looking at AI and data centers. But ultimately, the number one thing that we're focusing on is where the tech is evolving to. That's why we went to a quantum computing market. We've been focused on the AI robotics as well, and also the materials making up what's driving the robotics, and also the space tech industry, which has been growing tremendously as well. So we got some trades going on there with Redwire and Black Sky there. So we're going to be following those stocks. If those are the types of stocks you like to invest in or you're interested in, then I would encourage you simply have a look at the second link in the description for StockMate. We trade there live. We just wrapped up our daily live trading this morning. We were trading Apple, and we're still in it. It's the 2x of Apple actually. And so far as we're entered this morning, looks like we're up just a little bit over $200 profit. As Apple, we like to trade companies on the short term that we would want to hold long term regardless. And we don't trade pumps. We always look for integrity. We're not trying to take advantage of just one hit swings. We have systems and processes that we deploy in all of our shorter term trades and investments that are longer term. And you get all of them in StockMate in our live session. Now, one thing you get as a bonus when you join StockMate is a free t-shirt. Now, the live trading happens Monday through Friday. It's the second link below. If you want to tune on in, you can have a look there. And additionally, we just launched a release of the machine yesterday. If you missed it, we went over the AI analysis tools that we're adding, the new models that we're introducing here like Grok and OpenAI, where you could search any stock you want, for example, BigBear.AI, and get an analysis in just a few short moments. We could see it's pulling up the financials, it's looking at the press releases, it's analyzing the market data. All of these things are being looked at to streamline how fast you can do your analysis on your companies that you're investing in. And all we do is do the financial work for you. We look at the charts that are in the next few months are going to impact, the next few months, but maybe the charts that are in the last few days impact the next few days. There's different time frames you look at when analyzing the future of time frames. And so essentially what we're looking at here is an analysis for future time frames. And sometimes it could take a little bit. Grok sometimes can be really long. So let me go ahead and just switch it here with OpenAI and get a quicker analysis. But basically, OpenAI, the pro model there, if you want to go get it, it's probably going to cost you about $200 a month. Grok, that model, the Super Heavy Max, is around, I think it's $199 or $249 maybe. Along with Claude we're adding and Gemini, you can get all the models we're adding over the next year for free when you join the machine and get StockMate as a bonus. So there we are. We have technical analysis being given some outlook on the day in the next 3 months. And we can actually see the next 3 months, the next month, the next week, and actually get projections here for the stock and get an idea of what's contributing to its growth. So if you want to get access to AI analysis from the best models in the world, again, it's the first link in the description for the machine and getting StockMate as a bonus when you sign up. See you guys in the next video. Take care.